Today, SBF continues to speak out after the collapse of FTX. A BlockFi lawyer reveals the top priority for the company following bankruptcy, and Anthony Georgiades of Pastel Network shares his outlook for the industry in 2023. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices jumping this morning. As of noon Eastern, Bitcoin traded just below $17,000, earlier trading near its highest level in 3 weeks. Ether, meanwhile, traded above $1,200, and XRP was up 0.33%. All right, let's talk about the top stories. First, Sam Bankman-Fried continues to speak publicly about the fall of FTX despite growing legal threats. In a new interview posted on YouTube by crypto investor turned whistleblower Tiffany Fong, SBF addressed withdrawals and the collapse of the crypto exchange he founded. He did not explain exactly how FTX and his trading house Alameda allegedly misappropriated billions of dollars in FTX user deposits. However, SBF emphasized that he greatly mistook how leveraged he was and said, quote, "You don't get into this situation we got in if you make all the right decisions." Fong noted the call took place a couple of weeks ago, a few days after FTX filed for bankruptcy. SBF also responded to the Reuters article that attributed sources as saying that he secretly moved billions of dollars in funds to Alameda. On the call, SBF said he certainly didn't build a backdoor as he could barely use the system given he doesn't know how to code. SBF is also set to speak with Andrew Ross Sorkin at the New York Times Dealbook Summit this evening, and we'll have more on that tomorrow. Next, as the aftershocks of FTX's fall continue, creditors of Genesis Global Trading have hired restructuring lawyers in an attempt to avoid bankruptcy. That's according to Bloomberg, which cited people familiar with the situation. You might remember, following the collapse of FTX, the lending arm of Genesis suspended redemptions and new loan originations after it reportedly had nearly $200 million locked in an FTX trading account. The firm's interim CEO noted in this letter to clients that discussions with potential investors and the company's largest creditors and borrowers, including Gemini, have been taking place in an effort to come up with a solution that shores up the lending business's liquidity. He stressed that preserving clients' assets is at the core of the talks. A Genesis spokesperson told us the company's goal is to, quote, resolve the current situation in the lending business without the need for any bankruptcy filing. Last, a BlockFi lawyer told the court during the firm's first bankruptcy hearing on Tuesday that a top priority is to, quote, maximize client recoveries and that it plans to reopen withdrawals as part of that effort. The day before, the crypto lender filed for bankruptcy protection, and during Tuesday's hearing, lawyers expressed that the firm is in a good place to restructure and salvage the business through the bankruptcy process. BlockFi's collapse was preceded by exposure to now bankrupt crypto hedge fund Three Arrows Capital and to SBF's crypto hedge fund Alameda Research. Lawyers say the company loaned over $670 million to Alameda. FTX had arranged a rescue plan for BlockFi, but that fell apart when the crypto exchange faced its own liquidity crisis earlier this month. Exposure to both hedge funds led to client withdrawals, but according to a lawyer, it was FTX's plan to acquire BlockFi that ultimately led it to file for bankruptcy. You might remember over the summer, FTX extended a $400 million revolving credit facility in an attempt to save the firm. It also offered to potentially buy the troubled lender. All right, on to our main story. As investor confidence in crypto has been hammered since the fall of FTX, I spoke with Anthony Georgiades, the co-founder of Pastel Network, about the recent market volatility and what investors can expect next year.
We're closing out the month of November today, and obviously there's been a lot of turmoil in crypto markets recently, given FTX and some of the fallout from that bankruptcy. But at the same time, I mean, Bitcoin's been in the $16,000, $17,000 range, and it's been in that ballpark for some time. So do you think the FTX drama is priced in, or is there more pain ahead?
It's interesting. I think there's a couple of things at play here. So if you had said that one of the second or third largest exchange has completely gone bankrupt, yet Bitcoin has pretty much oscillated and volatility over the last couple of weeks has been relatively minimal, and we haven't seen necessarily newer all-time lows than we had since June, for example. You'd be pretty surprised. And I think that kind of signals a couple of things. On one end, a significant amount of that early leverage and contagion got flushed out of the system back with the downfall of Three Arrows and incidences with Terra. So I think that initial contagion and sensitivity to a lot of the high levels of leverage has been flushed away. On the one end as well, though, I do think it's a little too early to tell just exactly how many corners of the crypto industry and the Web3 ecosystem this FTX debacle will really impact. What sorts of lenders or startups or foundations might it impact and kind of take down with it? And I think it'll take maybe a few weeks or months for all those dominoes to really tip and for us to have a better picture of really what that full meltdown looks like. However, with that said, I am pretty optimistic with the minimized volatility. I do think it lends stronger light to the broader support that crypto has fundamentally isolated from a single exchange failure.
Yeah, you mentioned some of the pain that we saw earlier this year back in June in the wake of Terra. So if we look at the full year here, I mean, we've seen some pretty huge swings given the negative headlines. But can you put this year's bear market into context for some of the investors who might be watching who this is their first crypto crash? I mean, how does this year's volatility stack up to something like 2017, 2018?
Yeah, if you look back at 2017, 2018, I would actually view that more tangential to, let's say, the dot-com crash than this crash itself. Because during that phase, there was a lot of irrational exuberance with ICOs and DeFi and a lot of initial projects that were raising tens or hundreds of millions of dollars with nothing but an idea on a PowerPoint and a fancy white paper. Today's crash and what we've seen this year is highly correlated to a lot of macroeconomic factors: inflation, interest rate hikes, obviously recessionary risks. So I do think that crypto, being a largely sensitive and correlated asset class to, let's say, speculative factors like technology, it's not surprising that we've seen this downturn this year itself.
You mentioned how correlated crypto has been this year and recently, but how does that stack up as we go into the end of 2022? If you look at Bitcoin's performance this year, it's down something like 60%. How does that compare to the NASDAQ, which is what Bitcoin's been tightly correlated as? I think so many times I've heard it, the NASDAQ on steroids. Where do we stand in that regard?
It's funny because Bitcoin has always been talked about as being a sort of inflation hedge or some asset that's been quote unquote idiosyncratic to some of the broader markets. Now, I stand by that thesis, and I think that over the long term, Bitcoin will behave that way. Just because it hasn't so far doesn't mean that it won't in the future. Now, again, a lot of the crypto sector itself has been the byproduct of the speculative nature in terms of the broader economic environment that we've been in over the last cycle. I mean, this is the first time in how long have we seen basically terminal rates increasing and ratcheting up at such velocity, such a both consistent amount of rate hikes, but also the dramatic growth and acceleration of that terminal rate. This type of tightening environment is definitely something that no one might have surmised back in 2020 or 2021, when there was a lot of cheap capital sitting on the sidelines looking for high growth, high risk, high octane investments a la crypto, a la NFTs, DeFi, etc.
So I want to take it to the outlook of 2023 for a little bit. And, I'm not asking you to predict the future too much here, but, some have said that the lasting effects from FTX could be the next 18 months to 2 years. What does that look like in terms of institutional adoption or funding for the crypto industry? And what are some of the positive effects that could come out of this in terms of where money is being allocated and businesses that consumers can trust?
So looking into 2023 and 2024, you're going to see continued research, development, product market fit, continued products that are rolling out into the industry, whether that's on the core infrastructure side, providing solutions for decentralized networks or enterprises, whether that's more consumer or user-facing applications, social media analytics, big data, new emerging use cases for NFTs. A lot of these applications are really starting to emerge and develop right now. And in this sort of market that, for the most part, at its core, is a lot less noisy. You don't have this sort of that irrational exuberance or speculation on pricing. You're basically, if you're working and building right now, you're hunkered down and you're building the technology that's going to support the ecosystem over the next 5 to 10 years. From an investor's standpoint, as I mentioned before, you have basically dry powder at all-time highs. That has to get deployed at some point in time. That's obviously just the business fundamental economic model of a lot of these funds. So they're going to be looking for opportunities in this space. There's going to be strengthened investment across core consolidated Web3 opportunities in the ecosystem. And those companies that are surviving today are going to continue to get stronger, capture a lot of that market share, and be better positioned than ever coming off the back end of this bear market to really succeed.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.